Now let's get to today's feature segment. Doug Flynn, co-founder of Flynn Zito Capital Management. Doug, how are you today? How are you feeling about these markets?
How you doing, Nicole? I'm feeling okay. This is a nice bounce back after a couple of days of negativity. But I keep looking at the market and seeing where we were in January of last year. We really haven't moved in about a year and a half if you forget the run up and subsequent downturn after that.
Right, so you're saying that's almost a trick. You got tricked how to invest. You're saying basically look at a stock that you like. I mean, we're not talking about the IPOs and the high flyers. You're talking about names we know, right? So take a stock you like, or a place you go, or a place you shop, or something you eat, I don't know, and look at it from 2017, see where it is in comparison. If it's close to around that level, then it's a good buy. What part of 2017 are you talking about?
Well, if you think about the fact that we really haven't moved in a year and a half, that's where, like, in 2017, you have that good run that we had. And that was a pretty good year in the market. And so you're looking at stocks that you maybe have wanted to pick up and might have gotten away from you at various points. So, whether it's especially in an area like technology, like take that sector, everybody loves tech, but that sector is the highest performing sector, of course, year to date. It's up like 28, 29% to the market's 18. And if you're not looking for the sectors that are out of favor and you want to go into the ones that are, you really don't want to overpay for stocks. So you look in an area like tech and you find a stock that maybe is trading at its 2017 levels. So that's how you pick up something that hasn't gone that far up and might be a better opportunity from a pricing perspective.
Right. So the pricing, just so I can understand, you're saying to look, like if I want to buy Starbucks or Amazon or PayPal or Comcast, I'm just looking up at the big board right here, all of which happen to be higher today.
Yeah.
I should look at 2017. Should I look at the second quarter, the third quarter, the fourth quarter?
It almost doesn't matter because if you're getting in 2017, you're just trying to avoid the fact that, since 2018, the market is the earnings have really been sort of flattened. And so if you get an increase in earnings in the fourth quarter, which likely we will, then you're getting some of those stocks without overpaying for them. And so it doesn't really matter what price, but you're looking for an entry point. And that's part of what we're trying to do, is find good entry
let's
points.
Get to your picks.
Okay.
I mean, I know you have some entry points, right? So NEWR, New Relic, this enterprise software company has been beaten down. It's down almost 30% this year. Enterprise software, cloud, data. Why do you like this one?
So precisely for this reason, this has taken a little bit of a hit, primarily because it looks like maybe some of the revenues are softening, but they have a lot of really good recurring revenue. As the cycle goes in a company like this, that tends to then pick back up. So here's one that is absolutely priced like it was 2017, and so you didn't enjoy the 29% rise in the tech sector this year with this particular stock. So if you like that and you think longer term, I don't really like buying sectors like tech right now, all-time highs, but if I'm going to go in there, I want to find one like this, which is a little bit off.
All right. And what about Endopharma, ENDP, another name that has been beaten down, and this one down about 60% this year. I mean, I'm noticing a trend that you're picking stocks that are a little out of favor, and you think they have room now to the upside. You're not looking at the trends. It's not like a momentum play. It's the opposite.
That's exactly right. So, always finding good things that you're not overpaying for. Those are some of the lessons that you want to learn as an investor, and you have these things on the side. Now, this one is your sort of high flyer. It's sort of a penny stock, and so you don't really want to go too crazy with it. But you're looking at something, from 5 years ago, the stock is literally down like 90-something%. But it is something that has good revenue potential, and there's some possibility there for it to make some money. So that's what we're looking for, is something of an entry point after it's beat down. But this is a high flyer. I wouldn't go crazy with it. The other ones in this area, listen, I love the healthcare sector, are ones that we've spoken about before, and are really good long-term plays that probably are a little bit of a safer play. But that whole sector is one I do like because it's only up about 6% instead of 18% versus the market.
Right, I know you say you still like A Biomed and Centene. I only got a second left. Give me a quickie on Cabot Oil and Gas, COG.
Yeah, so in the energy sector, the second worst performing sector year to date, another one you want to look at, ones that are out of favor. This is one of the largest sort of independent oil and gas exploration companies. Had a little bit of a fall off with the natural gas pricing, but is poised really well in the fourth quarter to take advantage of some increased earnings. So that's, again, an opportunity to possibly take a look at dipping your toe in the pool if you like the energy sector and want to pick it up a little bit or something that isn't at its all-time high.
Yeah, and I'm sorry for the shareholders. I mean, they've gotten hit on some of those names pretty hard. So
they definitely have.
Maybe now's time to get in or double down, or I don't know. All right,
Exactly.
Doug Flynn, co-founder of Flynn Zito Capital Management. Nice to see you. Thanks for joining us on the show.